Let's welcome Girish Pai, the head of research at Nirmal Institutional Equities. Girish, hi, good morning. First, I wanted your thoughts on the news flow that came in from Cognizant, where they chose not to revise their guidance upwards. In fact, they held it on to, at that 8.4 to 10% in dollar terms. I was reading your note that you put out earlier this morning. Just tell our viewers what the impact of this could be on the sector as a whole, because overall the BFSI trends have improved. Do you think this Cognizant news flow could have any rub-off effect?
Not really. I think Cognizant is in a space of itself. So, I was expecting Cognizant to actually raise its guidance for the year because the demand environment has probably been the best we've seen in the market ever since the global financial crisis, and this is corroborated by multiple players in the market. I think the issue that Cognizant is going through is that it's committed to increasing its margins, non-GAAP EBIT margins, from about 9 to 20% that it had in 2016 to as much as 22% by 2019 calendar year. This is something that it committed to the shareholders about 18 months back. So I think what it is doing there is basically trying to let go of business which is not profitable, or not bidding for projects which are not going to be meeting its threshold norms from a margin standpoint. So that, I think, is what's leading to a situation where organic growth is going to be at best similar to that of Infosys. Obviously, TCS is going to lead the sector from an organic growth perspective for FY19. If you look at the rub-off effect, I think it may probably come from the big bank-related commentary that Cognizant has given. So, corroborating what TCS has said, and to an extent what Infosys said, Cognizant is saying that large banks in the US have started spending. Though the commentary on European banks seem to have turned a little negative. They are saying that there could be some growth wrinkles there. I don't know whether this is company specific. Maybe Cognizant is giving up certain business or not bidding for certain business from some of these clients. So broadly, my sense is it should not have a material impact on the Indian companies per se. I think, as I said, it's in a space of itself.
Sure. Girish, straight away on FMCG companies, Manpasand as well, but some of them like Dabur have reported mind-blowing volume growth numbers, but we didn't see that getting reflected in every other, like Marico and all were more in line with their normal performance, 12%. How are you looking at this space? What do you like?
Yeah, so I think the consumer staple companies have delivered some stupendous volume growth numbers. I think this is a continuation of the track record that we've seen over the last few quarters now. Yes, this particular quarter, the June quarter, you've seen really great numbers come through. I think we will continue to see good numbers going forward. I think from a base quarter perspective, I think I think the base still would still be fairly low even next few quarters. So I think that is going to kind of play out. I think the consumption story is fairly strong, both on the rural side and to some extent on the urban side. And yeah, the valuations look fairly rich as we speak. But within the basket of consumer companies, we are more positive on HUL among the large cap companies, and we're kind of a little bit more cautious on ITC, where we think that volume growth for the SIG side will continue to be a problem for many years to come. And with the profit from cigarettes being almost like 85% of the business, we think that the earnings growth in ITC is going to be very much. So I think from a relative standpoint, we would say that we prefer HUL to ITC. Yes, valuation gap is very large right now, but we think that ITC could potentially be a value trap, and we think that HUL could deliver fairly decent growth. If you look at the larger consumption basket, I think should be looking at players like consumer durables. We could potentially play consumer discretionary, which could be auto. We could potentially play consumer discretion in the form of film exhibition companies, which have kind of seen a big hit because of the F&B related controversy. So you should look at a larger basket on the consumption side rather than look at purely consumer staples. Consumer staples, I think, are a limited play right now with the valuations having run up. So broadly, that's my take on consumption.
Okay, that's your take on consumption. I wanted your thoughts on how to approach the aviation stocks, because looks like things are going from bad to worse. I mean, Interglobe reported those massive fall in yields, and now Jet Airways is talking about, how they sort of can't hold on to their costs. They need to bring them down, slashing employee pay scales, etc. You think it's still headed downwards, this entire pocket, or is there any kind of contrarian call that you would advise here?
See, we really do not track the aviation sector, but purely from a top-down perspective, I think the fact that a fairly large player with a reasonable amount of market share could potentially go out of business or probably reduce its market share pretty dramatically going forward because of cash flow related problems could be good for the other players that are there in the market, which could be Indigo, maybe it could be SpiceJet. I'm not too sure about whether Air India is going to pick up some of that lost market share in one sense. So, yes, I think the stocks have taken a big hit because of the rise in crude prices. If you take a structural bet on the sector, I think there is a potentially a case for that because volume growth there is still fairly good. 15 to 20% kind of volume growth is what's coming through on the passenger side. And companies which are kind of holding their costs down, which is what Indigo has been doing, and to an extent SpiceJet has been doing. I think when the market kind of picks up, and I'm talking more in terms of the crude kind of coming off from where it is right now, I would probably think that you will see fairly sharp earnings bounce back in some of these companies. So. As I said, structurally, if a player with maybe a teens kind of market share is kind of go down, then I think the other beneficiaries the other stocks could be beneficiaries out there.
All right.